your view on the telecom sector. Over to you first, Mr. Bathini.
Yeah, hi. Good morning to you. Definitely, the current norms of the government definitely is like an oxygen for Vodafone Idea. So that's the reason the stock has up today in trade, but the stock has chopped off because of the recent Supreme Court ruling, more than 60%. But in terms of the fundamentals of the company is concerned, still they have to increase their customer base. That's where they're lacking. And also the ARPUs has been decent in the recent past, but where fundamentally they are lacking is increasing of the subscriber base. That's where Vodafone Idea is concerned. For the investors at this point of time, only high risk appetite investors only, they can look into Vodafone Idea kind of names. But for the long term is concerned, one can stick in terms of the for investing in telcos is concerned. Definitely, Airtel can be the favorite bet for us. But whereas Vodafone Idea is only for the high risk appetite investors. Definitely, the current norms that has brought by the cabinet, the waiver of the bank guarantees, will definitely just like oxygen for Vodafone Idea. But the recent commentary of the management in recently, they're still firm in terms of, they're pretty much confident in terms of the recovery and the growth prospects of Vodafone Idea is concerned. But still, it has to come out of these woods and increase their business.
Okay. What about you, Sarvendra? So cautiously optimistic it seems, Kranti, and more for the high-risk investor is the way he's putting it. Sarvendra, your views from a technical perspective? You like Vodafone?
Yes, prior to that, I would like to thank, it's been due to my some commitments, I was not on NDTV earlier. I started my career with NDTV Profit. So good to be back, and thank you guys for inviting me back once I was free from my commitments. So it's a pleasure being back here. It's a pleasure being back here. And yeah, coming on Vodafone, I think, I've always maintained, people who follow me now that I would be regular here, hopefully. So I think the thought here is that it's got a broad range between 5 to 20 rupees. So it's more a range-bound stock. If you go and look at it over the last 2-3 years, it's been a more range-bound stock, and 5 to 20 has been where it has traded maximum amount of time. 70 to 80% of the data, price data would be in that range. So I think within that trading bias, it's towards the lower end of its trading range. No doubt, I would agree with Kranti that it's only for the high-risk traders, because these kind of stocks, penny stocks, 1 out of 10 or 2 out of 10 will give you the kind of returns that you would want, and 8 would underperform or disappoint in majority of the cases. And these are always high risk if you are trading that. So I would agree that this is not for everyone, first and foremost. For me, it's more like a trading range, which has been a long-term 2-3 year trading range between 5 to 20. So if you're buying here, then 5 rupees is your stop loss, and 15 to 20 on the upside would be a target, which you should have patience. 12 to 18 months kind of patience is needed if you want to take that kind of a trade. But mind you, this is a space very volatile with news, and this particular company has disappointed till now.